When I'm talking to my older clients, I'm like, look, I'm not asking you to put all your money into Bitcoin. I'm just saying that having zero Bitcoin is insane because it's got more asymmetry than anything else in the in the world right now by a large measure. I've never seen anything this good. Even at this price, you kind of just have to get comfortable with the fact that what Saylor said is correct. It is going up forever, Laura. And so, I mean, if you bought it at 60 and it goes to 600 and then it goes to 6 million, both of which I think will occur now over multiple years, you're going to be really glad you bought it at 60. So, but you've got to have patience.
Spot Bitcoin exchange traded funds, ETFs, in Hong Kong have surpassed 2 billion Hong Kong dollars, which is approximately $256 million in assets under management, AUM, marking an outstanding feat. Notwithstanding this accomplishment, the US counterparts have drawn much more money and investors. Over the past week, there has been a net inflow of 247 Bitcoin into the 3-spot Bitcoin ETFs in Hong Kong, increasing their total holdings to over 4,450 Bitcoin. Amidst these developments in the ETF market, renowned Bitcoin enthusiast Lawrence Lepard recently offered his advice on investing in Bitcoin in an interview. Larry pointed out that while elderly investors might need to exercise greater caution, younger investors might be more at ease with Bitcoin's volatility. In addition, he expressed his view that Bitcoin will exceed gold in terms of long-term growth and investment potential, and demanded a stop to government irresponsibility. According to Lawrence Lepard, risk tolerance is heavily influenced by age when it comes to Bitcoin investing. Elderly investors might be more cautious because of their shorter time horizons, he pointed out, but younger investors have a longer runway and can tolerate market drops. Elderly investors should diversify their holdings with some Bitcoin, Lepard stressed, but they should proceed cautiously. Watch clips from the interview for further insights into Lawrence Lepard's interview. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
If you're 30 and you can, that you've got a long runway in front of you and a lot of earning power and so forth, yeah, if this thing goes up and down a bit, who cares, right? But if you're 60 or 70 and you put all your money into something and it has a 60% drawdown, well, that's kind of bad. I mean,
Absolutely.
And so I mean, I think older people are right to be somewhat cautious, but that doesn't mean they hold zero. And obviously, I'm glad you talked your father into it because it is the best performing financial asset. It's going to, in my opinion, it's going to continue to be the best performing financial asset. And so, it's if you can live through the roller coaster, which, as we all know, kind of never lasts more than 4 years, then you're fine. But if you're on your deathbed and you might need the money, your heirs might need the money in a year or two, well, you probably shouldn't have all your money in Bitcoin.
That's it.
You got to have a So it's just a matter of, I mean, it's not a 0 or a 1. I mean, when I'm talking to my older clients, I'm like, look, I'm not asking you to put all your money into Bitcoin. I'm just saying that having zero Bitcoin is insane because it's got more asymmetry than anything else in the in the world right now by a large measure. I've never seen anything this good, even at this price. And that's the funny thing I encounter, and I've orange pilled a ton of golds people, but I encounter a lot of people looking at it and they're making the mistake of fixing on older prices. Well, geez, yeah, I get it for you. You bought it at 5,000, and it's at 60,000 now. How can I pay that much? And I'm like, yeah, but you don't understand. When I was buying it at 5,000, I was looking at Max Kaiser who bought it at 2. and you kind of just have to get comfortable with the fact that what Saylor said is correct. It is going up forever, Laura. And so, I mean, if you bought it at 60 and it goes to 600 and then it goes to 6 million, both of which I think will occur now over multiple years, you're going to be really glad you bought it at 60. So, but you've got to have patience, right? And we all know that. Those of us who are in it, know it, have studied it, etc., say that. The only Bitcoiners the only thing I think is a warning to people, and the only time I've seen people get hurt in this, and I think it's incumbent upon all the Bitcoin cheerleaders, and I'm one of them, you're one of them, we all are, we believe in it, is to fully explain to a buyer what they're buying and what it can do. Because the only time I've ever seen anybody get hurt at is when they got all excited about it, they FOMO'd into it right at a peak or near a peak, then it had a big drop, they concluded they were wrong, and they blew it out at the bottom, and that's, I mean, they did part of it right. They bought some, but they didn't do the other part right. They didn't dollar cost average down. They instead let the price convince them that they were in some way wrong, and they sold. Whereas if they just hung on, as we all know, everybody who's been in it for 4 years is ahead, of their cost basis, and I think that pattern will continue. But for an older person who's got risk, aversion, it should be an aggressive part of their portfolio that, if it goes down 60%, it's not gonna change their lifestyle or scare them. And so I don't know what that means, but I mean, if you're 70 or 80, maybe it's 10% or 20% of your portfolio. That's just a guess. I mean, I think everybody's different. I know 70-year-olds who have all their money in it, but they fully understand it and they believe in it longer term. So, it's a matter of understanding what you're buying. But having been an investment professional for 40 plus years, the first two things you should look at with respect to an investment are what's the pattern? What has it done in the past? Because it's probably going to do that in the future to some degree. And then, what's the performance? And, the pattern in the past is it's been volatile with some big drawdowns. So, if you're buying it and the money you're using to buy it, you think to yourself, oh, if it goes down 60%, I'm going to want to shoot myself. Well, then you're buying too much. But if you buy it and you say to yourself, I know that in a 10-year time frame it's going to be up a lot, and if it goes down 50%, I don't care, then that's the right amount to buy. And then if it does go down 50%, as you've done, I've done, others have done, you think to yourself, oh, this is great, it's on sale, and now I'm going to buy more.
According to Lawrence Lepard, gold has a strong network effect and is a store of value due to its 5,000-year history and worldwide awareness. Due to gold's comparatively lower volatility, younger people in Turkey purchase Bitcoin, while elderly ones purchase gold. Lepard chastised central banks and governments for their reckless actions, which he claimed were creating a sovereign debt bubble that would inevitably burst. He projected that there would be hyper-Bitcoinization eventually, if not right away. He anticipated a resolution within the next 10 years, along with significant inflation and money printing. Despite its increased volatility, Lepard thinks Bitcoin has better investment potential than gold, and that it will move dramatically in the next 3 to 6 months. He advocates legalizing Bitcoin, silver, and gold, as well as a sound money standard. Let's go back to the interview and watch more clips to gain insights from Lawrence Lepard.
8 billion people on the planet know what gold is. They know it's money, 5,000 years of history. It's just got an enormous network effect in that respect. And yeah, Turkey's had a lot of inflation, and what I've been told by a couple of people I know who live there or been there is that the young people are buying Bitcoin, the old people are buying gold, and it makes perfect sense. I mean, it's the one thing about gold can be volatile too, but typically volatility in gold is down 20%, not down 50, 60, 70%. That volatility generally irons itself out pretty quickly in both of these assets because they're not being printed, and that's really the underlying theme here. And the reason why these things are going to work so well is, the other side of this coin. I mean, if governments and central banks throughout the world were behaving in a responsible fashion, what we're proposing wouldn't be as relevant. But I think anybody who takes the time to read the news and investigate the facts can only conclude that governments and central banks are operating in a very irresponsible fashion and probably with growing irresponsibility, which is why I think ultimately we're going to get to hyper Bitcoinization, but that's not tomorrow. That's years away. But we're heading in that direction because, it's just math. I mean, you cannot continue to keep a sovereign debt bubble going unless you print more money. Otherwise it'll collapse on itself. I mean, very deflationary. And kickoff of this fourth turning was '08. I mean, I think that was a big wake up call, right? I mean, that's when I really woke up to the fact that, oh my God, these guys are out of control. And they're going to print money forever to keep this thing going. 20 years from that would be 2028, 30 years would be 2038. So I feel like there'll be some resolution to this issue in the next 10 years, pretty certainly, probably less. And as the issue comes to get resolved, what'll happen is we'll have enormous inflation, a lot of money printing. They won't be able to stop. And the way a currency fails or quote unquote hyperinflates is when everyone loses confidence in it. And, we're starting to see that. I mean, there are two very good clues of that. One is a record high gold price we just achieved. In US dollars, it's over $2,500. I'm sure in Australian dollars, it's a record as well. And then, the Bitcoin price is not at a record, but it's awfully close. I mean, record was in the low 70s. We're pretty close to that in the 60s. So maybe we're a tad below it. And I've also observed historically that when these things move, gold tends to smell things first and move first because it's more broadly distributed and I think more geopolitically sensitive to problems coming. And so, my sense, if the pattern holds from the last few times this happened, my sense is that, in the next, 3 to 6 months, Bitcoin's going to move. It's going to move really hard and faster than gold. I mean, I think Bitcoin's a superior investment to gold if you can handle the volatility. I'm anti-inflation. I think we should go to a, sound money standard, and the choices being gold and Bitcoin, and that they'll get voted in, and we will move in that direction. I mean, the book I'm writing also tells policymakers what they should do. I mean, I think the first thing they should do is they should make gold, silver, and Bitcoin all legal tender, so that there's no capital gains tax associated with holding these things, right? They're money. And so if we have four kinds of money, dollar, gold, silver, Bitcoin, let's say, just to pick four examples, and they're all legal tender, and so you can trade with them, you can, do contracts in gold, you can, all the above. There's no tax on, transactions in them. And let them compete and see who comes out at the top, on a store of value basis, I'm pretty sure, I know who will win, and that's Bitcoin. On a transaction basis, a method of exchange basis, well, we got a little bit of work to do there. I mean, the Lightning Network is nice, but it's still pretty undeveloped and nascent. I mean, when you consider how big the credit card networks are as a comparison. So, but it's a broken system, and some of us see it, and a lot of people don't see it, and they're being distracted by the political people who are trying to get them to fight amongst themselves rather than recognize that the enemy's in Washington, D.C.
A crypto analyst, echoing sentiments similar to those of Bitcoin enthusiast Lawrence Lepard, has emphasized the importance of staying invested in Bitcoin amid market volatility, predicting a significant breakout to the upside. Despite Bitcoin's previous price crashes and ongoing market fluctuations, the analyst remains bullish on its future, much like Lepard, who also advises investors to focus on Bitcoin's long-term potential and to be prepared for market volatility. In a post on X, formerly Twitter, on August 20th, an analyst known as CryptoCon shared insights on Bitcoin's current state using a detailed price chart, expressing confidence that the most thrilling phase of BTC's market cycle is imminent. This aligns with Lepard's recommendation that investors maintain a long-term perspective to capitalize on Bitcoin's asymmetric growth potential, rather than exiting prematurely in response to short-term market swings. CryptoCon argues that selling Bitcoin now would be akin to abandoning the market just before a rebound, a view supported by his analysis of the Puell multiple cycle. This metric, which compares Bitcoin's daily issuance value to its yearly average, has historically indicated key support and resistance levels in Bitcoin's price cycles. The current cycle suggests Bitcoin is at a low point, poised for a major upward rally. By sharing a price chart tracking Bitcoin's movements from 2010 to 2026, CryptoCon underscores the importance of recognizing patterns and staying invested, mirroring Lepard's advice to weather the volatility for potential substantial returns in the future. As we conclude, what are your thoughts on this interview? Do you think Bitcoin's potential is worth the risk, or do you believe the volatility is too high for comfort? We'd love to hear your perspective. Please drop your thoughts in the comments below, share this video, and hit the thumbs up button if you enjoyed it. Thanks for watching, and don't forget to subscribe for more insightful content.